Hey, welcome back to Everything Money. We're happy you joined us. As always, this is Seth, Paul, and Mo is here. Today, we're talking about CCL. Paul, you've been a huge proponent of this. And by the way, we're recording this on July 15th. Paul, you've been a huge proponent of CCL since all the crash happened. We were asking you when all the stocks were crashing last year during COVID, which ones do you like or what are you buying? And you pointed us toward CCL because you looked at the numbers, how they could survive this crash. They have, of course. And we have been buying along the way, Mo.
Yep.
We've been making a sling. Our patrons have as well. And it's falling back down a little bit.
Not a little bit, quite a bit.
Yeah, quite a bit.
Yeah.
And so we wanted to revisit Carnival Cruise, look at the 8 pillars, more of a high level, Paul, and look at if you're interested in expanding your portfolio and getting some of this, what are the options of, no pun intended, what options do you have in terms of maybe writing some puts on this or just straight up buying? It's still a very interesting company, Paul. And I'd love to hear your thoughts on it as our viewers would as well. So I present to you Paul Gabriel. Welcome in and talk to us about Carnival Cruise.
So last year when we first looked at Carnival Cruise Line, I thought it was a $50 to $60 stock, all said and done. At the time it was selling for 13, 14 bucks. I think it got in around 13 and a half, $14, whatever the number is. Didn't it get as low as 7 or 8 bucks? It's at somewhere really low. When looking at the numbers, though, I thought to myself, this is an example of an overreaction due to the fact that we didn't know what was going to happen with COVID. So remember, guys, you're going to make the most money when fear is the greatest, when unknowns are very large. Like what's going on here? Since then, Carnival went to up over 30 bucks a share, right? Everybody thought this is back. Now remember, we also made a bet on Southwest, which absolutely skyrocketed from our purchase price of 25. I got out at 47, and it went up to 60, and I don't even know where it's at right now. It's around 50 something. But I also thought Southwest was a $60 stock, and I thought to myself, it got up to 47 in like 4 or 5 months. I'm like, okay, I'm just selling this because...
Well, let's be very clear. In contrast to other YouTubers, Paul, the math told you wanted to the value of the stock. Correct. You're not just thinking of this, which if you're watching other videos out there, you ask yourself why. When people come up with these massive price predictions...
Oh, they'll have whys, but the question is, are those whys reasonable?
Yeah, keep going, though.
So with Carnival, there's 2 things that have happened since then. One, the economy has rebounded and ships are now set to sail, right?
Yeah, they started sailing 2 weeks ago. First one was out of Texas.
Because if you look at their revenue, and here's the hard part about the 8 pillars. The 8 pillars relies on historical data. But our historical data over the last year has been garbage for Carnival. Look at the revenue they did last year in the previous 12 months leading up to May 2021.
You did more revenue than Carnival Cruise last year?
No, but $139 million in revenue versus 16.8 the previous billion and 19.8 the year before that. So this is a 99% drop in revenue, guys.
Amazing.
Now, they still have the cash to be able to get them through the storm, which is why I like them. They were the biggest cruise line and they had the best balance sheet. But since then, the second thing that's happened is they've issued a lot of shares to kind of fund these losses. So every time they issue shares, they are diluting other owners because what happens here is now the profit and revenue has to get split up amongst more and more shares. Even though your shares stay the same, they're issuing more shares, so your cut of the profit and revenue decreases.
Show us the shares, Paul, what they're doing.
So if you look over here, down here at the bottom, they have almost doubled their shares.
Oh my God.
In the last 3 years.
Ain't nobody got time.
They went from 721 million last year to 1.13. That's a big jump, guys. So since then, I said 50, 60 bucks. Now I'm saying $40, $45, maybe 50 on the high side for Carnival Cruise Line. So we're readjusting it now. I think these shares have probably maybe a reason for why the stock, I don't know why the stock is down because now they're opening up. And this just shows you guys how emotion can play such a big deal in investing. Look at this.
Go ahead, Mo.
It's very interesting to see that you saw it was always news and the CCL would jump up 10% in a day, down 10% a day. Now you actually have the ships actually going back on the water and the stock prices moves down.
June 2nd, it was 31 bucks. Since then, they've gotten back on the water and now it's 22.
It's crazy.
So for those of you who sit there and sometimes use news to justify your claims, I sit there and say, well, wait a second. If it's at 31 on June 2nd, they're actually on the water, shouldn't the stock keep going up? But something's caused it to go down. What is that? That just shows you how moods can change about an investment at any time versus what's actually happening out there, right? So we're always reassessing. Am I still a fan of Carnival Cruise Line? Yes. Do I still think it's worth $40, $50 a share? Yes. To me, there is enough upside that I'm willing to make more of a bet. Now, one strategy we have, and I still own my shares of CCL, one strategy we've used in the past is selling puts on the strategy. So what does that mean? I am selling someone the right to force me to buy the shares at any price I choose in the future at any date I choose. So as an example, by the way, we are adding options to our website here. This is our stock analyzer tool and our Everything Money software. We are adding options to it. That way our users can do their research.
Patrons, if you're watching, Paul emphatically said we're adding options. He literally just figured this out 7 minutes ago and asked Tim to
Not true. I've talked about options for a while, but
it's funny to say that because you're like, folks, patrons, you know this. If Paul has an idea, he literally just like, Tim emails Market Watch. Market Watch gets back to, not Market Watch, Morningstar. They get back to us, and like minutes later, it's happening. That's so
you're right, welcome. Though. That's exactly the way it went. It was just literally like, Tim, email Brian, ask him with this. Brian responds, ask him this,
and
boom,
we're getting
let's go.
options. Okay.
But that's the commitment to the software. So before we started this, Mo said, hey, I'm going to buy the shares right now. They're at $22.58. But he said, instead of doing that, let's bring some income in. So he said, let me sell. Tomorrow, the options expire for July. So we went to our options page, and this is on Market Watch. The $22 put for July 16th is currently paying between 19 and 20 cents a share. So what this means is Mo can sell if Mo wants to buy 500 shares, he would sell options on 500 shares and collect, let's say, 20 cents. That's $100. If the stock finishes at $22 or less tomorrow, he'll be forced to buy the shares for $22, but he collected 20 cents. So he's really actually paying $22 minus 20 cents, which is $21.80. So it's a way for him to collect income buying shares that he wants at a price he wants in the future. If the stock doesn't hit 20, if the stock stays above 22, he keeps the 20 cents, he doesn't get the shares. So it's a way for him to collect income and decrease his basis while also getting his shares at the price he wants. Now, let's say you want to look a little bit further out. So let's go to August and see what the August prices are. So we go to August and we sit here and say, okay, on August 13th, $22 a share. That pays $1 to $1.10.
Come on.
Yeah, well, because remember, it's so close to the strike price and it's a month out. Mm-hmm. It's basically a 50% chance it's going to hit that. So what Mo would do here is sit there and say, okay, I'm going to collect, to make it easy, $1 times 500 equals $500. So he's going to collect $500 waiting for this to hit. If it stays above 22, he keeps the 500. If it goes below 22, he's forced to buy 500 shares at 22 bucks, which is $11,000. But he also keeps the 500. Mm-hmm. So his basis actually, he paid $10,500 for the shares.
Now, all of this is based on what you want to buy this at, Mo.
That is the big key.
Yeah. You'd be happy to buy this at 22 or even 18.
By the way, because I look at this as eventually I think this is going to be $40 to $50 stock. Mm-hmm. So I'm willing to buy it and wait because I do still believe that they are the best cruise line out there from a financial standpoint.
And the risk is if it goes down to 17 or something, he's still buying them at 22, right?
Correct. But if he was going to buy at 22 today and it went to 17, he was still going to have a $5 loss anyhow. So the way to look at this, if you're a value investor, is I'm okay because I'm collecting income along the way. If I would have bought it today anyhow at this price or at the strike price that I wanted, let's say he wants to buy it at $20 a share. He'll collect about 35 cents per share on August 13th. So it's a much lower strike price, but he's got a lot less premium coming here. But if it goes below 20, he's forced to buy it. But in his head, he's like, I was buying it at 20 anyhow, so I'm okay at least collecting income along the way. That's how you can make money while waiting for stocks to go to the prices you want. That is the big key. I am probably going to write some CCL puts today on the company. Since it's in a downtrend right now, the premium for buying it at lower prices is probably very high, a lot higher than it usually is. So I don't mind writing. I'll go out further. Let's say I go to, let's do this, Uncle Mo. Let's go to January 2022. $15 strike price. Look at this. Pays 50 cents. Okay. That's 3% over the next 6 months.
Yeah.
That's good.
I mean, it's not bad. It's not great.
What's
but
that
it's about 6% annualized return.
What's that strike?
On my cash, 15 bucks. So that's the thing, guys. It's a third less price, and I'm collecting an annualized 6% return. Why? Because it's 50 cents divided by $15, which is 3.33% for half a year, times 2 for the full year is 6.7%. So I'm actually collecting 6.7% return on my money while I wait for the stock to go to $15 a share. 15. Would you rather buy CCL at 22 or 15?
Let me pause right there, Paul. If you're a patron and you've been with us for so long and this really gets your undercarriage steaming, I imagine, Paul, in a few months to years from now, I'm going to be doing this with you guys on a daily basis. And I love looking at these numbers, coming up with prices, writing some options. I've been telling Beth, I want this to be my new hobby. Is like once this show takes over our lives even more, I would imagine we would get together, probably talk about this with the patrons on a daily basis. This is exciting.
There is possibility as the show grows, your income grows, that you could literally take your wedding business and say, you know what? I'm only going to do 8 to 10 weddings a year. I'm going to make my money on that.
Yeah.
I'm going to continue to do the show, and I'm going to make $10,000 a month on options at some point. I'm not saying that's a guarantee, but that could very well happen.
Yeah.
And at that point, you'd be like, this is awesome. My life is great. I'm making money doing, because a big factor in my portfolio is, I always tell people, when all the patrons want to mimic my portfolio, they got to remember, if I just match the market returns, which I will beat just by doing options.
Yeah.
I will get an extra 5 to 10% a year just from doing my options. That's a good weight. Now, the catches for right now is you have to have the ability to buy or sell 100 shares at a time. That's the minimum you can do.
Yeah.
Yep.
But as our friend the other day, Damon, who's more well-versed in the options, he figured out a way to do what's called the poor man's options, right? So where if you don't have the money to do it, you can do some, I don't remember what he called it, but basically it's buying and selling different puts and calls together.
Yes.
So that you can...
A combination of both.
Correct. That way, well, not a combination of, it's different strike prices to mimic the fact that you actually own the shares. So learning from us is the best way to do it, because we can show you how to make money, add your portfolio. Because not many people do this. But if you can only add 3% a year to portfolio just by doing this, we're talking about doubling your money extra every 20 years.
Yeah.
Doubling your money an extra one time every 20 years.
Amazing.
So if you have 40 years to retirement, you're going to have 4 times more money just by adding 3% a year to your returns.
Right.
That's incredible.
So, Paul, when you say all this, it just hits me that you talk about an extra doubling over 20 years, yet now if you fire up any social media app, it's all about like doubling in the next 20 minutes. And
by the way, I don't mean you're going to double your money in 20 years. I mean you're going to get an extra doubling of your money. So if you make 10% a year on your money, over 20 years, you basically tripled your money. Now, instead of tripling, you get 6x your money just by adding 3% a year.
So the point is, as I keep reading and learning, Paul, it's really the best investors in the world. They think about what they're going to lose way more than what they're going to make. You know, how do we lose the downside risk? I talked to someone this past weekend in Myrtle Beach. I love talking to normal people, getting their opinion. And the mindset of what I could lose never crosses their mind. It's always about how much will these ticker prices, these Bitcoins, listen to me sound like these old Bitcoins, the cryptos, they'll go up. But like, what is the safety net behind options, value investing, things of that nature?
Well, all I'd say is, look at all the best value investors in history. They don't find the hype stocks that make 100 times their money. It just doesn't work that way. I look at things like sports. If you own a sports team, do you want the guy who's going to hit you a home run 1 every 10 times, but all the other 9 times he's striking out? No. You want the guy who you go, this person gets to the plate, they're getting on base 40% of the time. That's what wins championships. I want the guy who he takes 3-pointers, and yeah, he might be able to hit some other guy might be able to hit a full court shot, but you don't need a full court shot. You'd rather have a guy who can hit 40% of his 3-pointers every single time. If you had 10 of those guys in your team, you were winning every title from now until the end of time, right?
Yeah.
So this is the way value investing is. It's about the numbers. It's all about the numbers. It's all about the probabilities. When people are going for the hype, though, they don't realize the downside risks of things. My good friend, Grant Cardone, by the way, he's not really my good friend. I think he's a douchebag. He's an idiot. He's a moron. He says 6% is better than 0. Literally one of the dumbest things I've heard in my entire life. His comment is, well, if you're making 0, this is what makes over bubbled markets, is 6% not greater than 0. If 6% also is so overpriced that it could go to minus 50%, then you wait until it drops. You stick your money in 0% because the overall risk, 50% of 0% is greater than 50% of negative 50%. These are the So let's put it this way. You have a 50% chance of losing 50% or a 50% chance of making 6%, your overall respective return is negative. It's a negative 25% and a positive 3. Your still overall expected return is negative. That's all investing is buying so cheap that your overall expected return is much higher. That's it. Now, when do you find those? You find those in companies. Everybody reveres Warren Buffett, and it's so funny. Everybody talks about how value investing is dead. Yet every hype investor now will
calls
talk about
themselves a value investor.
Yes. So it's so funny. They talk about how value investing is dead, but they're like, oh yeah, but really I'm a value investor because I see this. It's like, wait a second. It's like me sitting there saying, I don't know what the analogy is, but they criticize something and then use it as a way of edifying themselves. Of like saying, oh no, I'm a value investor. It's like, but you say value investing is dead. You say that I'm boring. It's
our channel, we poo-poo everything and we never buy anything. And then the opposite flip of the coin is they say that they're value investors and they're disciplined. They look at fundamentals. It makes zero sense. You're right.
Okay.
So Mo, are people trading this? Because I'm looking at that chart and I'm not liking it.
Yeah. So this is let's look from this long term. So this is the notorious 50% rule stock that I pull up all the time, where the 50% is just this is where we had that big sell-off back in March of 2020. And every time now they get up to a certain point and they take their profits and sell. Get up to a certain point and sell. So it cannot break through this big resistance point. Eventually it'll get through it. But this is the notorious one that has not been able to get through it. Let's zoom in now and kind of see why it's been a heck of a decline lately. It's just moving down, but we're getting into that oversold area. So this is kind of the reason why I'm looking at it saying, maybe I do want to start selling puts here, because how much lower can it go? Of course it can go way lower.
Yeah.
But based on charts, I kind of mix that in a little bit. Maybe it's not going to go that much lower. So right now I'm kind of seeing that maybe this is getting to the end of this current drop, this current cycle that it's in on a chart. That's why I'm thinking I'm going to go and buy this thing from a value perspective based on all the digging that I have done. But I'm going to kind of use the charts in that way. So this is not something I would short right now, but maybe when it starts to get that uptick going, comes into the sweet spot on the positive side, then you can go at it.
Paul, your final take on CCL. What are you doing?
I am going to issue a lot more puts today to get the stock at a much lower price. Maybe I'll scatter them over the next 5 or 6 months, but I think CCL is still a buy. The biggest concern I have is their issuing of shares, of course. They're pretty close to making it all of a sudden. The price is going to be 30 to 40.
You know what I would really like to see in their 10K or 8K, whatever? I would want to see them say, yes, we are issuing a lot of shares, but we're doing it for this reason, and we plan on buying them back at this certain point. That's what I kind of want to see.
We haven't read the 10K in a while.
Maybe it's in there, but I want to see that plan going forward.
Yeah, I mean, listen, I still like the fact they issued shares versus issuing debt during this time because, debt during an uncertain time was kind of obnoxious, but I'm still a buyer of CCL.
Same.
And especially at these prices. Oh, there you go.
And frankly, I think they're going to start getting back when they're getting on the water. Then we start seeing earnings coming in over the next couple of quarters. I think people are going to realize, okay, this is getting back, especially when CCL gets back on the water at full capacity of pricing, because they're still giving a lot of discounted cruises.
Of course.
When that happens, boom.
Guys, a 99% drop in revenue over a 2-year period.
Yeah.
If you're in the Patreon or want to be in the Patreon, you can always go to our software here. I'm showing you. You can click on annual reports and get right to the 10K right here, baby. And you can see everything right from our software. It's an amazing part that we're offering as a part of our Patreon. So that's our take on CCL, an exciting opportunity for value investors like us, and exciting opportunity for all those old folks who want to go up to Alaska and see all the whales. It's happening, baby. Get your vaccines.
I want to go shoot
the whales, can't you? I think Carnival Cruise Line is offering that as part of their.
You were a whaler for a couple of years, weren't you, Paul?
That's part of their sales pitch.
That's actually a line I stole from Curb Your Enthusiasm in the first season, episode 1. The second season, episode 1. It's my favorite one. They're buying a new house, and they're like, "Oh yeah, you can see whales." He's like, "Can you shoot the whales?" And they're like, "Yeah, don't listen to him." He's like, "No, listen to me."
That's our take. Fondle the thumbs up on the way out.
Oh, by the way,
go ahead, Paul.
LuxuryEI.com is our house in Mexico. You can actually see whales from our houses in Mexico.
Oh, that's true. There's nothing better than sitting at
And
breakfast.
if you're a Patreon, you get a discount for getting weeks at our houses in Mexico, and soon to be house in Turks and Caicos.
5 to 15%.
5 to 15%, depending on what level you are in our Patreon. So join it below, get our software. Don't be dumb. You can go to Mexico super cheap.
That's our take. Thanks. I love
Shooting
you.
whales.
You know it. We can shoot the whales together from Paul's Mexican mansion. It'd be great. That's our take. Love you.